Welcome back, everybody, for another deep dive. You ready to go?
Always.
Okay, good. Today, we're diving into the world of Bernie Madoff, one of the biggest names in financial scandals.
One of the most fascinating cases I've ever come across.
Really?
Oh, yeah.
So, we're using Too Good to Be True as our guide, The Rise and Fall of Bernie Madoff by Aaron Arvidland.
Great book.
And we want to look at a few things. How did he manage to deceive so many people for so long? Who enabled him? And were there any warning signs that people just totally missed? Like, what was going on there?
Well, it's interesting because he wasn't this, shadowy figure operating in the, fringes of finance or something like that. He was actually a Wall Street icon.
Like, this guy was legit.
A legit guy. Yeah, chairman of NASDAQ, pioneer in electronic trading.
Yeah, so how did this seemingly upstanding guy pull this off? It's baffling.
Yeah, so let's rewind back to the beginning. Where'd this guy come from? He seemed like he came from a pretty ordinary background, middle-class Jewish family from Queens, attended Far Rockaway High School.
Same high school as Carl Icahn. Yeah, the famous investor.
Wow.
And Dr. Joyce Brothers, the psychologist.
Oh, wow. Interesting.
Yeah, so think about it. Finance and psychology. We see both of these playing a big role in Madoff's life.
His whole trajectory.
His whole trajectory, his rise and his fall.
And we even see some early hints of the Bernie Madoff that would become this infamous figure. A college friend recounts a story about him driving crazy in the snow, like really fast. And when someone asked him, like, hey, isn't that dangerous? He said, no, because, the width of the car stays the same regardless of the speed. So I'm not really increasing the risk.
Oh, my gosh.
Yeah. What do you think of that?
That's Madoff in a nutshell right there.
Yeah.
The ability to justify risky behavior with logic.
Yeah.
It's like he could convince himself and others that anything he did was totally fine as long as he could make it sound logical.
Yeah, I mean, that's going to become such a big part of his operation later on, right? This idea that, like, no, this is all good. It's all above board.
Yeah, a total master of justification and persuasion.
Mm-hmm.
And that's what made him so dangerous.
So after college, he's starting to build his empire, right? In the 60s, he establishes Bernard L. Madoff Investment Securities, focusing on stocks that were traded on the pink sheets.
Pink sheets, yeah.
What are pink sheets for our listeners who don't know?
So basically, these are like over-the-counter stocks, like a less regulated, less transparent market for these smaller companies.
Okay.
Not like the big New York Stock Exchange.
Okay, yeah.
It's kind of like the Wild West of the stock market.
Okay.
But Madoff, he saw opportunity there. And you got to give him credit. He was ahead of the curve when it came to technology.
He was cutting edge.
Totally. He saw how computers could completely revolutionize the speed of trading. And he jumped on that.
Well, he became the chairman of NASDAQ, right?
Exactly. He helped make it what it is today. And he also pioneered this practice called payment for order flow. Now, some people argue that this created a conflict of interest because it meant that brokers were getting paid to route orders through specific venues instead of always finding the best price for their clients.
It sounds a little shady.
It did raise some eyebrows.
Mm-hmm.
But at the time, it was seen as a pretty innovative way to boost trading volume. And it made Madoff super popular with clients because he would give them rebates for trading through him.
Yeah.
So on the surface, it seemed like a win-win.
So he's building this empire.
He's building this empire.
Like everything is legit, above board, but behind the scenes, there was a completely different story unfolding.
Oh, absolutely. This is where things get really juicy. Alongside his very public, very successful brokerage firm, Madoff had this whole secret investment advisory business going on.
Wait, so he had two businesses going on?
Two businesses.
And nobody knew about the second one?
Well, only a select few knew. His early investors, it was like a close-knit group. Family members, friends, and people connected through his father-in-law, who was an accountant.
Okay, so it was all very hush-hush.
Super hush-hush. And the returns he was promising these people, they were insane. Like 10 to 15% annually, year after year, no matter what the market was doing.
That doesn't even make sense.
It doesn't. I mean, if you know anything about the stock market, that kind of steady high return over a long period of time, it's just not realistic.
It's impossible.
It's like winning the lottery every year.
That should have been a huge red flag for anyone.
You would think so, right? But Madoff was a master manipulator. He was able to leverage the reputation of his legitimate brokerage firm to make this shadowy investment business seem credible.
So he's using his good name to cover up his shady business.
Exactly. He blurred the lines between the two businesses, making it seem like everything was part of one big, successful operation.
So it's all about perception.
Totally.
Yeah.
It was smoke and mirrors, a carefully crafted illusion.
But how did he get away with it for so long? Like you said, there were red flags. Those returns alone should have tipped people off.
You're right. There were red flags all over the place.
Yeah.
But Madoff was very good at deflecting scrutiny. For example, he refused to reveal any details about how he was achieving these amazing returns.
So if you asked him how he did it, he'd say what?
He would just say, oh, it's a proprietary system.
Yeah.
It's too complex for you to understand.
Oh, really?
Yeah, and he'd kind of imply that you weren't smart enough to get it.
It's like he was using his intellect to intimidate people.
Exactly. He made them feel like they should just trust him because he was the genius.
But that's ridiculous. Like, any legitimate investment strategy should be able to be explained and scrutinized, right?
Of course. But Madoff thrived on secrecy. He needed to keep everything shrouded in mystery to maintain the illusion.
And then there's the whole issue of conflicts of interest. I mean, his family members held key positions in both of his businesses.
Yeah, it was like a family affair.
And there was that firm Comad Securities run by one of his close friends that was funneling tons of money into Madoff's fund.
Yeah, way too cozy.
Yeah, it just doesn't seem right. It's like he was creating this inner circle of people who benefited from the scheme.
It's like he was building his own little financial ecosystem.
Yeah. And another thing that seems off is his auditor. For an operation this massive, his auditor was this tiny little firm, practically unheard of.
Yeah, like a mom-and-pop shop auditing a multinational corporation.
It's completely out of proportion.
It's mind-boggling. And then there were his claims about his trading activity. He was bragging about executing huge volumes of options trades, but people who actually worked in the options market had never even heard of him.
So he was this supposed master of the options market, but nobody knew who he was.
Exactly. It's like he was a ghost trader, a phantom of the financial world.
The whole thing is so bizarre, it's like a bad movie.
It really is. But the crazy thing is, so many smart people fell for it.
Yeah, why? Like, how could anyone, let alone seasoned investors, be so easily duped?
Well, I think part of it was the allure of those consistent above-average returns. Madoff offered a sense of security, a promise of beating the system without taking on a lot of risk. And people crave that kind of certainty, especially in times of economic uncertainty.
So it wasn't just about getting rich quick. It was about the promise of stability.
Exactly. It was about finding a safe haven in a volatile market.
And Madoff was a master at building trust. He cultivated this image of exclusivity. He targeted investors from these elite social circles, country clubs, philanthropic organizations, even synagogues.
Yeah, he was very strategic about who he targeted. He knew that social proof was a powerful tool. If you see your friends and neighbors investing with someone, you're more likely to trust them.
It's like that whole keeping up with the Joneses mentality.
Absolutely. Madoff understood that people are influenced by their peers, and he used that to his advantage.
So it's like this financial version of FOMO, fear of missing out.
Exactly. He created this illusion of a secret club, a select group of people who were privy to his winning formula.
And it wasn't just individuals, right? Big institutions were falling for this, too.
Oh, yeah. Huge feeder funds like Fairfield Greenwich Group, Tremont Bank Medici, they were all pouring money into Madoff's fund.
And these are supposed to be sophisticated investors.
Right. But even they got swept up in the hype. The promise of those consistent returns was just too tempting.
And then there's the SEC, the Securities and Exchange Commission, the regulatory body that's supposed to be protecting investors from this kind of fraud.
Yeah, they really dropped the ball on this one.
They received multiple warnings about Madoff's activities. There was even this detailed report from Harry Markopoulos, a financial analyst, who laid out all the red flags, all the inconsistencies, the mathematical impossibilities of Madoff's supposed returns.
Markopoulos practically handed them a blueprint of the fraud on a silver platter.
Yeah.
And they still didn't do anything.
How is that even possible?
It's baffling. It really makes you question the competence of our regulatory system.
So we have this guy, a Wall Street icon, creating this facade of success and legitimacy. He's promising these unbelievable returns. He's attracting investors from all walks of life, individuals, institutions, even charities and religious organizations. He's got this whole network of enablers helping him along the way.
Yeah, he built a real house of cards.
But the question is, how did it all come crashing down? Like, how does this charade, this decades-long deception finally unravel?
Well, as with most financial frauds, it all comes down to money. When the money stops flowing in, the whole thing collapses. And that's exactly what happened to Madoff. The 2008 financial crisis was the catalyst. Investors panicked by the global market meltdown, started demanding their money back.
But he didn't have the money, did he?
Nope. He had been spending it all along to maintain the illusion of success, to fund his lavish lifestyle, and to pay off earlier investors with money from new ones. It was a classic Ponzi scheme.
It was a pyramid scheme.
Yeah, doomed to fail from the start. It could only survive as long as new money kept coming in. And when the financial crisis hit, the tap ran dry.
So that's it. The money dries up, the scheme falls apart.
Exactly. The house of cards came tumbling down, and in December of 2008, Madoff finally confessed to his sons, who then turned him over to the authorities.
It's crazy how it all ended so abruptly. Like one minute, he's this Wall Street legend, and the next he's a confessed criminal.
It was a shocking fall from grace.
And the human cost of all this, the impact on people's lives, it's just heartbreaking.
Devastating. Countless people lost their life savings, their homes, their dreams. It's a stark reminder of the human toll of financial fraud.
Yeah, in the next segment, we'll delve into the aftermath of the scandal, the consequences, the victims, the attempts to recover assets, and the lessons learned. Hopefully some lessons learned.
It's a story that's full of twists and turns, betrayals, and hard truths. It's a story that continues to resonate even today.
Stay tuned. We'll be right back.
It really is. It's a reminder that even the smartest investors, even the ones with all the connections, can still fall prey to these really elaborate schemes.
Especially when those schemes tap into our deepest fears and desires. Like you said, the need for security and stability.
Absolutely.
Yeah.
So Madoff confesses. The authorities get involved. What happens next?
Yeah, what are the consequences of this massive revelation? I mean, this was huge.
Well, in June 2009, Madoff is sentenced to 150 years in prison.
Wow.
Basically a life sentence.
Yeah.
It was the maximum sentence allowed.
Yeah.
Really a symbolic gesture of how severe his crimes were and how widespread the damage was.
So justice was served, at least legally, but a prison sentence, no matter how long, can't really undo the financial ruin that he caused.
Right.
What about the victims?
Right. That's where the Madoff Victim Fund comes in.
Right.
They set this up to try to recover assets from Madoff's web of shell companies and investments with the goal of trying to compensate the people who lost money.
Okay. But I imagine it was a long and complicated process, right?
Oh, yeah. Incredibly complex, trying to trace the flow of money through years and years of transactions and investments.
So did the victims ever get all of their money back?
Sadly, no. Many victims only received a fraction of what they lost.
It's just tragic to think that even with the best efforts to recover assets, people's lives were just completely changed. Their financial security just decimated.
Yeah, it's truly heartbreaking. And the fallout from this scandal extends so much further than just individual losses.
Right, because it really impacted the entire financial world, didn't it? What were some of the broader consequences of the Madoff case?
Well, for starters, it completely shook people's faith in the integrity of the markets, especially the hedge fund industry.
Which makes sense because this wasn't just some small-time crook. This was a major player on Wall Street.
Exactly. Someone who operated within the system, someone who was supposed to be subject to all these checks and balances.
Right. It really exposed the vulnerabilities in the regulatory system, didn't it? I mean, we talked about how the SEC failed to act on those warnings.
Yeah, and it raises serious questions about their effectiveness in overseeing these complex financial operations. And not just the SEC's fault. It also highlighted the lack of transparency and accountability in the hedge fund world. I mean, this is an industry that's known for its secrecy, right?
Yeah. And for its complex investment strategies.
Oh, yeah. Which is ironic because you mentioned earlier that Madoff's returns weren't actually that astronomical compared to some legitimate hedge funds. So what was it about his operation that made it so alluring even to these experienced investors? Why choose Madoff over some of these other, maybe higher-yielding options?
Yeah.
It was the consistency of the returns that he was offering.
Yeah.
He promised. And for a really long time, he actually delivered these steady gains that seemed to be completely immune to market fluctuation.
Yeah, it's like he had this magic formula.
Right, and that created this illusion of safety and stability.
Yeah.
And let's be honest, that's incredibly appealing to people, especially when the economy's uncertain.
So it wasn't just about getting rich quickly. It was about seeking out that sense of security.
Exactly. A safe haven in a volatile market. Madoff's pitch wasn't about doubling your money overnight. It was about preserving wealth, generating reliable income.
Which makes sense for people who are approaching retirement or maybe managing charitable foundations.
Right. They weren't looking for risky bets. They wanted stability and predictability. And that consistency, that illusion of stability, it masked the underlying fraud.
Right. It lulled investors into this false sense of security.
They didn't question the details. They didn't demand proof. They didn't seek independent verification because he was delivering on his promises.
Yeah.
He was reinforcing that belief in his system.
Yeah, and let's not forget the social proof aspect. I mean, when you see your peers, people you respect investing with someone, it's easy to just get caught up in that momentum.
Yeah, you start to think, Well, if they're doing it, must be a good idea.
Right. And Madoff was a master at leveraging those social networks, targeting those exclusive country clubs, the charities, religious communities. He understood that people are more likely to trust someone who comes recommended by someone they already know.
Yeah, and it's not even necessarily malicious intent on the part of those who are recommending. They genuinely believed that Madoff was the real deal. So they were unwittingly becoming accomplices in his scheme.
It's fascinating and disturbing at the same time. He was using the same tactics that legitimate businesses use to build their brands, social proof endorsements, creating a sense of exclusivity. But he was using those tactics to create this elaborate illusion of success and legitimacy.
Exactly, and that's what makes this case so compelling, so instructive.
Yeah.
Because this wasn't some crude fly-by-night operation. Madoff was operating on a whole different level.
Right.
He was using sophisticated marketing techniques, psychological manipulation to create this convincing facade. He understood human psychology. He understood the desire for security. He understood that people are susceptible to social pressures, and he exploited those weaknesses.
Yeah, his success, if you can even call it that, was as much about understanding human behavior as it was about financial manipulation.
Oh, absolutely.
It's a chilling reminder that even the most sophisticated con artists can appear credible and trustworthy.
And that appearances can be very deceiving.
And that blind trust, even in people who seem really reputable, have disastrous consequences.
It's also a cautionary tale about complacency, right? About not asking tough questions, about blindly following the crowd.
It's easy to get caught up in the hype and forget to do your due diligence.
Yeah, exactly.
Yeah.
Investors, regardless of their experience or sophistication, they need to be vigilant. They need to demand transparency and never be afraid to walk away from an investment that feels off. That seems too good to be true.
Which is easier said than done, especially when you're dealing with someone as charismatic and seemingly successful as Madoff.
Oh, for sure. But it's a vital lesson we can all learn from.
So we've talked about Madoff's methods, the victims, the enablers, the regulatory failures. But what about the man himself? Like, what was his motivation? What drove him to do this? Was he just a greedy sociopath?
That's a question that's fascinated a lot of people. Psychologists, criminologists, the public.
Yeah.
And frankly, there's no easy answer.
Some people speculate that he started with good intentions, but got caught up in this web of lies.
Yeah.
A spiral of deception that he couldn't escape from. Others believe that he was always a con artist at heart.
That he derived pleasure from the thrill of the con, from the power and control that came with manipulating other people.
And it's interesting to consider the role of ego in all this. I mean, he was already incredibly successful with his legitimate business. He had wealth, he had status, he had respect. So why risk it all with this elaborate scheme that was ultimately self-destructive? What was driving him?
That's the paradox of Madoff. He had achieved a level of success that most people only dream of. But it seemed like it wasn't enough. Maybe he needed to prove something.
Yeah.
To himself or maybe to others. Maybe he needed to validate this sense of intellectual superiority that he had, to show that he was smarter, more cunning than everyone else.
It's almost like he created this alternate reality for himself, this world where he was the ultimate financial wizard.
The puppet master.
Yeah, always one step ahead, orchestrating this grand illusion that only he understood. It was a game to him, a challenge, and the stakes were people's lives.
And that need for control, that inability to admit failure, that obsessive need to maintain that facade of success, it was his undoing, a classic case of hubris.
Right, overreaching ambition leading to a catastrophic fall from grace. Except in this case, the consequences were devastating for so many people.
Yeah, exactly. This wasn't just a personal failure. The ripple effects were felt by thousands of people, causing financial ruin and emotional devastation.
The Madoff story is captivating and deeply unsettling.
It really is.
Because it forces us to confront some uncomfortable truths about human nature. The allure of greed, the seductive power of deception, the willingness to believe in something that just seems too good to be true.
Absolutely.
And it reminds us that even the most seemingly secure investments, even the most reputable institutions, can be built on a foundation of lies.
Yeah.
So we've covered a lot of ground here. Madoff's early life, the mechanics of the scheme, the devastating impact on his victims, the broader consequences for the financial world.
It's a complex story with so many layers, a story that continues to fascinate and provoke discussion even today.
But what's interesting to me is like how Madoff's case, even though it happened over a decade ago, still has implications for us today.
Oh, absolutely.
Yeah.
It serves as this like stark warning. This could happen again.
Right.
Are there like modern-day Madoffs out there hiding in plain sight?
Yeah.
Maybe using even more sophisticated techniques?
It makes you stop and think, doesn't it? At the beginning of our deep dive, you said Madoff's story made you stop and think, could it happen again? Are there these new Madoffs hiding in plain sight?
Okay.
After looking at all this material, yeah, I'm starting to think that too.
It's a question worth pondering. I mean, think about it. Think about the rise of all these new complex financial instruments, the increasing speed of transactions, the global interconnectedness of markets. In some ways, it's even harder to track and regulate financial activity now than it was when Madoff was operating.
Yeah, and with the constant pressure for returns, the 24/7 news cycle, and social media constantly promoting these get-rich-quick schemes, it feels like the potential for fraud is even greater now.
Oh, absolutely. The information overload, the pressure to keep up with the Joneses financially and socially, it creates this breeding ground for scams and manipulation. It's a lot to navigate, even for seasoned investors.
So what can we as individuals do to protect ourselves? It feels overwhelming sometimes, like the system is rigged against the average person.
It's true, the financial world can feel incredibly complex and intimidating. But there are steps you can take. Lessons we can learn from the Madoff case to safeguard our finances.
Okay, I'm all ears. What's the most important thing to remember?
Due diligence. Never underestimate the importance of thoroughly researching any investment, no matter how tempting it might seem. Don't just rely on testimonials or recommendations from friends or even financial advisors.
Because they might have ulterior motives.
Exactly. Take the time to understand the underlying strategy, the risks involved, and the fees being charged. If something seems too good to be true, it probably is.
That old adage holds up.
It really does, especially in the world of finance.
Okay, so due diligence. What else? What are some other red flags that people should watch out for?
Lack of transparency. If someone is pressuring you to invest in something that's shrouded in secrecy, it's a big red flag. Legitimate investments should be able to withstand scrutiny.
Yeah, like Madoff saying that his strategy was too complex for anyone to understand.
Exactly. Demand clear explanations, audited financial statements,
Yeah.
and don't be afraid to ask tough questions. A reputable financial advisor will welcome your questions and be able to give you satisfactory answers.
It's our money. We have the right to know where it's going.
Exactly. And be wary of conflicts of interest. If the person who's managing your money is also profiting from your investments in a way that's not fully disclosed, that's a potential problem. Because it could mean that they're incentivized to make decisions that benefit them and not you.
Yeah, it's like that saying, don't ask the barber if you need a haircut. Get an impartial perspective.
Exactly. And it's also crucial to diversify your investments.
Right, don't put all your eggs in one basket.
Right? No matter how trustworthy the person or institution seems, spread your risk across different asset classes, different sectors, different geographic regions.
Classic investing advice.
Yeah, but it's especially relevant when you think about the Madoff case. He was seen as a safe bet, and people entrusted him with their entire life savings.
Yeah, and they paid the price.
Exactly.
Yeah.
Diversification helps to mitigate risk. Even if one investment goes sour, you're not going to lose everything.
Okay, good advice. And any other tips?
Trust your gut. If something feels off, if you have nagging doubts, don't ignore them. Do more research.
Yeah.
Seek independent advice and be prepared to walk away if you're not completely comfortable.
Yeah, I think that's such an important point. We're often told to trust the experts to believe in the system, but sometimes our own intuition can be the best warning system.
Right.
We need to pay attention to that inner voice.
Absolutely. It's about finding that balance between respecting expertise and also maintaining a healthy amount of skepticism, especially when it comes to your hard-earned money.
Okay, so we've got due diligence. We've got watching out for red flags. We've got trusting our gut. Anything else?
Yeah, I think it's also important to emphasize the importance of financial literacy. We need to understand the basics of investing, the different types of assets, the risks and rewards involved.
Yeah, that's why we do this show, right? Trying to empower people with knowledge, to help them make informed decisions, and to encourage critical thinking, not just about finance, but about all aspects of life.
Absolutely. Knowledge is power, especially in today's world.
So the Madoff story, it's a cautionary tale, but it's also a call to action, to educate ourselves, to be vigilant, to question assumptions, and to always do our own research.
Exactly. And to remember that no investment, no matter how alluring, is worth sacrificing your financial security or your peace of mind. There are no shortcuts to wealth. And anyone who's promising you easy riches is probably selling you something that's too good to be true.
Well said. It's been a fascinating and thought-provoking deep dive into the world of Bernie Madoff. Thanks to Aaron Arvidlund's book, Too Good to Be True, for giving us so many great insights.
And thank you to all of our listeners for joining us on this journey. We hope you've learned something new. and maybe gained a renewed appreciation for the importance of skepticism in a world that often feels designed to deceive us.
Knowledge is your best defense. Stay informed, stay vigilant, and stay curious. Until next time on The Deep Dive.